Welcome to Alpha Recap, your post-market wrap from stockalpha.ai. We've got Jordan here, and joining me is Ben, our commodities and market structure expert. As always, if you have questions, you can reach us at stockalpha.ai. Let's dive into what closed out June.
Great to be here. Lots to unpack from today. A clear tech-led rally and a month-end tone that pushed risk appetite higher.
So, quick headline first. Markets closed up, with the S&P 500 finishing up about 0.75%, the Nasdaq 100 jumping about 1.7%, and the Russell 2000 ending the day up about 0.5%. Those numbers really set the frame for a tech-heavy session.
Exactly. The day looked and felt like a classic risk-on move, where AI optimism and softer rate fears were the two big engines behind flows into large-cap tech and communications names.
Let's peel that apart. Ben, what were traders reacting to? Was it more AI hype or the Fed commentary?
It was both, honestly. Analysts refreshed earnings expectations tied to AI and cloud demand, and that narrative suggested an earnings lift for certain tech pockets. At the same time, Fed-related commentary, including previews around incoming Fed governor remarks, softened the immediate odds of additional aggressive tightening, which nudged the market toward growth. So what really stands out here is how those two forces combined: thematic optimism plus a moderation in rate fear. That combination pushed momentum into high beta names.
Right. And the other thing is, the differential between the benchmarks was pretty noteworthy. The Nasdaq 100 outperformed by a pretty wide margin compared with the S&P 500.
Yeah, that tracks. That gap shows concentrated leadership. A handful of mega-cap AI-exposed companies carried a lot of the move, while smaller caps participated but lagged.
Let's talk sectors. Technology and communications were the clear leaders. Chips, cloud software, ad tech, all benefiting from the AI narrative. What else stood out in sector action?
Materials and mining picked up some momentum tied to industrial demand and activity around energy transition deals. Renewable energy and clean tech names also attracted investor interest because of M&A and strategic moves, even though oil was pretty stable.
And consumer?
Consumer had pockets of strength. M&A chatter and corporate actions supported some retailers, and Nike's quarterly report was a headline driver. People were parsing China commentary to see if the company could get growth back on track. Financials were mixed. There were some stock-specific stories in regional and specialty finance that got attention, but larger banks were digesting earnings and credit commentary. That mix reflected caution around loan growth and net interest margin dynamics, even amid a generally higher market.
Real estate and utilities, though, seemed to lag. Rate-sensitive names felt the pressure.
Right. Real estate faced renewed rate sensitivity worries and idiosyncratic issues like rent controls in some markets. Utilities showed selective gains around clean energy, but overall policy headwinds left the group subdued compared with the growth rally.
Hold on, say that again. Crypto had any role in today's moves?
Crypto wasn't the driver, per se. It acted more as a sentiment amplifier. Names with crypto exposure experienced episodic volatility, but that was noise relative to the AI and Fed narratives.
Okay, I like that line. Sentiment amplifier. Short and to the point.
I mean, when you step back and look at this, crypto still moves certain stocks in noticeable ways, but it didn't set the market's direction today.
Let's get into why option flows and month-end positioning mattered. Ben, walk us through the technicals.
Month-end and quarter-end rebalancing tended to amplify moves, especially into large-cap tech. Option flow and fund flows showed tactical rotation into the Nasdaq 100 and related names. That can exaggerate intraday trends, but it also signals where liquidity was being directed. Volatility measures had moderated from prior spikes, which suggested a calmer backdrop, at least until the next surprise. But crypto-linked volatility remains a potential flashpoint for abrupt moves.
You mentioned some individual names earlier. Beyond Nike, any other notable corporate headlines that influenced the tape?
Yes, big tech and AI beneficiaries were front and center. Chip makers, cloud infrastructure, and software names that could see revenue lift from AI adoption. On the financial front, Nicolette Bank shares got positive attention in some idea pieces, while one main financial was discussed around credit profile and valuation. And a few small-cap industrials highlighted strategic pivots toward reshoring. Those tactical stories drew traders' interest. Also, M&A activity across consumer and materials sectors helped underpin rallies in those pockets. Deal flow tends to attract capital quickly.
Let's slow down and explain the Fed angle for listeners who may not be deep into policy. What did the market read from Fed commentary and research notes?
In plain terms, several research pieces and Fed speaker previews suggested that inflation pressures were easing and that the Fed could afford to remain data-dependent rather than tightening more aggressively right away. Analysts pointed to decelerating inflation gauges and argued the market was pricing a longer window for the Fed to assess the impact of past hikes. That lowered the immediate premium on duration and helped risk assets.
So the takeaway was less about a policy change and more about the odds of another aggressive move being down.
Exactly. Momentum indicated optimism, but that optimism depended on upcoming data, payrolls, CPI or PCE, and regional Fed commentary. If those prints showed renewed inflation strength, the mood could pivot quickly.
Short reaction.
Right.
Okay, so what historical parallels did today remind you of?
This pattern was familiar. Concentrated leadership from tech during a thematic catalyst. Think earlier waves like cloud adoption or prior AI cycles. Historically, those leadership divergences resolve in one of two ways. The rally broadens into cyclicals and small caps, or the concentrated gains pull back and leadership rebalances. Monitoring breadth was going to be key to judging sustainability.
Got it. So breadth is our canary.
Yep, if small caps and cyclicals start to pick up, that's a constructive sign. If leadership stayed narrow, it raised questions about how durable the advance was. Honestly, I was a bit surprised by how clean the tech leadership was today. Usually, you see a few more cyclical pockets join in earlier during a month-end tilt.
Yeah, absolutely.
Right, and the other thing is, we should watch next-day flows and options expiries. With month-end behind us, those mechanics can reshape intraday volatility if positioning was still lopsided.
Quick reactions. Interesting. Noted. Thanks.
Short reaction.
Let's finish with a crisp set of takeaways. Ben, what were your top 3 points from today?
First, the rally was tech-led and driven by AI optimism paired with a moderation in rate fear. That combination moved flows into large-cap growth. Second, breadth favored mega-caps, so the advance was concentrated. Watch whether small caps and cyclicals broaden that move. Third, data and Fed commentary remained the key risks. Payrolls, inflation prints, and Fed speak would determine if the easing in rate fears held.
Great summary. A few final housekeeping points for listeners. As always, our discussion is for informational purposes only. This is not personalized investment advice, and we are not recommending buying, selling, or holding any specific security. Analysts note market sensitivity to fresh data and Fed commentary. Momentum suggested optimism today, but that could change with new information.
Right, and traders should monitor earnings commentary for signs that AI narrative converts into tangible revenue and earnings upgrades across a broader set of companies.
All right, that wraps our June 30 market recap. Thanks, Ben. Always great context and clarity. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next time on Alpha Recap.